Hi there, welcome to Grain TV. I'm Kevin McNew. It's Monday, January 20th, and a down day in the markets. Let's take a look at Grain Edge's trading platform and see where we closed. In Chicago, corn off 4.5, wheat off 6.25, but beans was the loser to the downside, giving up 27 cents from Friday's close. News today was pretty light, really. It seemed like today was just a risk-off day after another weekend of good weather, further progress in Brazil's soybean harvest, and heavy longs in the soybean market. Start with Friday, and Friday on the CFTC report, they showed a 30-week high in fund long positions in the soybean market. That got the market in a selling mood on Sunday. In addition, Mato Grosso in Brazil is pacing along with their soybean harvest at 16% versus 11% last week, and overall an 8% average for this time of year. In addition, you've got rains on the horizon for dry parts of Argentina, dry parts of northeast Brazil. So overall, it seems like the threat and concern about South America's growing season is really starting to wane, and right now everyone is sort of heading to the exit on today's trade with no real let up in the selling, even on the close coming down to the low end at 1020 on March beans, closing around 1022.5. Other news out today, there was export sales announcements from USDA. They reported a 106,000 metric ton deal of corn to Colombia, but overall nothing really big. Also, factoring into the market is the slow time for China as they enter their Lunar New Year holiday, so we won't expect much interest from China in the terms of soybean purchasing going forward. Other news out today, there was the export inspections, usual Monday report from USDA. These numbers were good for corn and beans, but weren't enough to sort of stem the bearish tide that was present for much of today's action. In corn, we had over 1 million metric tons of export inspections compared to 750 to 950 expected. In beans, coming in a very sizable 1.6 million metric tons versus 900 to 1.2 expected. In wheat, continuing to be sort of respectable in the midpoint of the range at 321. If we look at year-to-date business and how we're faring versus last year, let's take a look at this next table that shows year-to-date what USDA what USDA expects year on year in terms of export changes. So when we look at corn, USDA is factoring in a 17% export increase from last year's marketing year, soybeans at 6% and wheat at 26%. We can look at the two various reports, the Monday report, which is export inspections or what's actually leaving the country, and the Thursday report, which is export sales or what's actually being forward committed. And what we see in the case of corn is very good numbers, both in terms of inspections, both in terms of sales compared to what USDA is factoring in. Now, that is maybe a little misleading, because when we look at last year, what we saw last year was a very slow start to the marketing year for sales of corn, but a better second half of the marketing year because of the problems in Brazil. And so that may have skewed these numbers a little bit, but overall we're certainly doing better than what USDA has factored in. Beans coming in still above expectations of 6% on both inspections and sales, but we have the concern of what will happen once South America is fully in the market for the second half of our marketing year. And then wheat coming in sort of right around where we would expect it to be based on USDA's number. Speaking of South America, what's going on in corn, we've seen Brazil's corn price really start to drop here in the last few weeks. As they get closer to harvest. Remember that this time last year they were starting to run into problems with their second season corn crop, and that really sort of took them out of the marketplace. It also took Argentina out of the marketplace because Argentina started to supply Brazil for their shortfall in corn production. So what we will expect to see this year is Brazil with a very strong corn crop. That means Argentina and Brazil likely going to be competitors in the world market for corn, which we didn't have in the second half of our marketing year last year. As we look at the price spread between Argentina and US on this next chart, what we can see is that spread, Argentina's price relative to the US, has started to wane. That is, Argentina is starting to come down relative to the U.S. You can see in December it was really strong, meaning that U.S. prices were very competitive, about $30 a metric ton less than Argentina, and now that advantage is starting to wane, as we get closer and closer to their harvest. So I would expect that to continue, that we'll start to lose competitiveness, probably start to see our exports really start to slow down in the second half of the marketing year. Taking a look at the daily March corn chart here, what we can see is very choppy trade. You know, we've sort of been in this very sort of stable or up and down sideways pattern really since harvest, going back to October. You can see we traded on March corn somewhere, generally speaking, between 340 and 370 on the high, which we just set not too long ago before coming down today. So really 340 to 370 is sort of where we're at right now. We're at 358. The red line here is the 50-day moving average. You can see we bounced below it for a little bit, did not close below it, but I wouldn't be surprised to see us start to move below the 50-day moving average as soybeans really starts to take it to the downside here. Soybeans has really sort of helped us propel corn higher in the last month or so. So if soybeans starts to lose ground, I think corn probably has some downside pressure as well. That's all we've got for today on Grain TV. As always, if you'd like to learn more about how we can help you in your own grain marketing situation, visit us online at grainhedge.com. Have a great day. We'll talk to you tomorrow.